how do you know if the market is trading in a range versus trending? And the strategy I have learned, which is I think it's the best fundamental strategy to learn, is about supply and demand zones and joining into trends. That's a great way to get started in trading. It depends on trends, and if the market is ranging that day, like going from end post to end post in a football field, and just going back and forth and not really having either going up or going down consistently, then using a strategy that's based on trends will get you stuck. So how do you determine whether the market is trending or ranging? Today was a perfect example of a rangy market. You might have, if you didn't have any indicators that help you to identify a ranging market or a trending market, you might have thought that this was a market was going to trend because it went up, it created a lower low here from this one, and then it created a lower high. This is a higher high. This is a lower high, and then this low is lower than this low. So you might have been like, okay, look, it looks like a downtrend. Let me wait for a pullback and continue the trend downwards. And look what happened. It didn't. It went up. It kept going up, and it broke this high, and this little downtrend terminated. So how do you know if this is a ranging market? To avoid joining a trade, hoping that it's a trend, and then getting stopped out and losing, which happens in trading. It's going to happen, but if we can minimize it, that's even better. So I was taught to use a tool called the opening range breakout. If you go on TradingView, it's called the opening range breakout. Where is it? So as you can see, this tool is called the opening range breakout on TradingView. Basically, just go up here to where it says indicators, this little thing here. You type in opening range breakout, and it's this one here, opening range breakout by ZZZ Crypto, and you can click the star to keep it in your favorites over here. And so and then you can, when you go in there, you can actually put in the time frame that you're looking at, which for the index futures, which right here, this is the ES, the E-mini S&P 500 futures. The opening range is considered the first 15 minutes of the market, and the first 15 minutes are usually very volatile, and I personally don't like to trade in those first 15 minutes because there's no sense of direction yet. So I like to wait for a certain direction to be formed. And so right now I'm in the 5-minute time frame, so each candle is 5 minutes long. And these green lines here are the opening range. So it maps out the first 15 minutes. And usually we look for it to exit through one of the sides of the opening range. This time I exited at the top. And we look for a pullback to a zone in the opening range. Like this was a good demand zone right here for a long, to put a limit order there for a long to continue forward. But as you can see, it came back into the opening range and just went straight to the bottom of the opening range. And then it went to the top of the opening range and came out the top. And then it went all the way down to the bottom. So even though it looked like a downtrend, if you didn't have that indicator, which could get you in trouble, I knew by looking at the opening range tool that we were stuck in a range. We went above the range to the bottom of the range, above the range, out the bottom of the range. And so that would tell me, don't use a trend trading strategy, which is the strategy that I'm teaching right now. It's not a good time to use that strategy. And losses are inevitable in trading. You're going to lose because not every strategy is 100%. So you kind of have to learn how to just trade the strategy and just set it and forget it. You see your setup. In this case, if there was an actual downtrend, I would be trading a downtrend here. And I would just this would be like a supply zone, and I would be I would have a limit order waiting there with my stop loss just right above it. I'd be waiting for a pullback into my zone, hoping that it continues downwards. And that would be an example of a rangy market, right? If this actually came out the bottom of the opening range, pulled back in to here, and then went below, then okay, now we're in a downtrend because it went out the opening range, went back into the opening range, and then popped straight out that same side on the bottom. It popped out the bottom, pulled back, popped out the bottom again. then I'd be like, okay, we're in a downtrend. Now I can look for another pullback for a short. That didn't happen. It popped back in. It never popped out at the bottom again. It just popped out the bottom, went to the top again. And that's not what we want. That tells us we're in a range. And there are other strategies that teach you how to trade when you're in a ranging market. Those are more intermediate and advanced, and they take a lot of kind of like finesse. They take a lot of experience, like knowing how candles are formed in real time. Like, for example, these candles here. Let me delete this real quick. These candles here are indicative of a rejection. They're trying to go higher, and they're sending these wicks up, but they never closed higher. They actually went down. These candles look like a little bit of a rejection as well. They're wicks to the bottom, showing that it's rejecting coming out the bottom, went back in. So there's strategies that help you in ranging markets. And there's one that I like in particular, which I won't mention right now because I'm assuming that you're a beginner, and I don't want you to go down that rabbit hole right now. This is a better strategy to learn for newbies. Now, this is a great example. This was last Friday of an opening range breakout that actually worked the way we want to see it. And so you can see that when the market opened right now at 9:30 a.m., price shot up really quick, and then it shot down really quick. And you can get into trouble trying to getting really excited about these green candles right here, and then putting in a long position and then getting stopped out as it changes directions real quick and went down, right? And so that's why I don't trade the first 15 minutes ever. And I wait for the opening range to be broken and retested. And so here it went to the top of the opening range, kind of showed some signs of rejection with that little wick sticking out the top. It exited the bottom of the opening range. It pulled back to this. This is actually a pretty good zone here. This candle here, you see how this is a base. This is a supply, even though it's red. If I put it on a smaller time frame, like 2 minutes, it might look a little different. See, this is the same chart just on the 2 minute time frame now, and this little zone here. So as you can see, this, it went to the top. It went to the top this high in the first 15 minutes. It failed to break out the top of the opening range, which is this green line here. It went, sellers stepped in and popped out the bottom of the opening range, pulled back in, which is the opening range breakout, retest. This is what we're talking about, retest. It broke out, retested, and we would have a supply zone waiting here, just like this. So this is an example of a trending market and what happens with the opening range. So it went to the top of the opening range, rejected, went out the bottom of the opening range, pulled back into this zone here, which is the retest, opening range breakout, retest, continuation. Opening range breakout, retest, continuation. Some people will tell you to use the bottom of the opening range as just use the bottom of opening range. And what I found, it's always a supply or demand zone in the range that caused it to break out. It was a base drop that caused it to exit the range. So that base right here is where the selling pressure was that created that breakout. And so that's the zone I would use. That selling that happening, there was buying and selling here. That's why there's a wick going to the top. Buyers stepped in at one point, sellers overpowered them, and the candle closed down here. So that tells me there's some selling pressure there. And that selling pressure overwhelmed the buyers, and the selling exited the opening range. It broke out. And that tells me that that's a good zone to use. Again, nothing is 100% in trading. It's about 60 or 70% that this works. And so it pulled back in, hit that zone. If we had a limit order waiting here, limit order at this bottom line of the supply zone, stop loss just above. then it would have exited again, and that would have been a really nice trade. And once you have enough movement in your direction, you can bring that stop loss to break even, or even trail the stop. Like for example, there's a new zone here. You could have gotten your stop, brought it from up here, put it right here at the top of that zone. So if you get stopped out, you make a profit. If it continues, you have a chance to make some more profit. When it created this other zone, you could have moved the stop down to here, and probably got stopped out with this next candle, and you would have made all this profit from here to here, all the way down here. So probably about a 3-to-1. And as the price moves in your direction enough, and you move your stop loss to break even, it's basically infinite profit, because you have zero chance of losing at that point. It started going in your direction. You move your stop to break even right here, or even slightly in profit if that makes you feel better. It makes me feel better, and that way it becomes a free trade. You can't lose, and at that point you can just wait and see what happens. So those are two examples. The first example from today was an example of ranging market. You can see the difference. It went above the open range to the bottom of the open range. It exited at the top, came back at the bottom. And you start to develop a feel for this as you back test this, after you do this daily. You start to develop a feel. It's like going to the beach to go surfing, and you can look at the waves and be like, oh, today is not a great day to go surfing. So this is how I do it. And there's some other ways with volume and just how fast or how slow the market is moving. You can kind of tell. You start to get a feel for it.